Okay. Hi, guys. My name again is Richard Fetchko. I'm the founder of Altfins, and welcome to lesson 5. In today's lesson, we'll cover various strategies that will take advantage of relative strength index, or RSI. This is one of the more popular indicators used by traders, along with MACD and moving averages. And today we'll look at 4 different strategies that leverage the RSI indicator. It's a very powerful momentum indicator. It can be used in combination with some of the concepts that we learned in the prior lessons, including MACD, bullish or bearish crossovers, MACD histogram, as well as resistance and support zones. So let's go ahead and learn about the relative strength index, or RSI. The RSI, if you look at the calculation right here, the formula uses average gains, or a ratio of average gains versus average losses. And it does that for the last 14 periods. That's sort of the standard RSI period is 14. So if we're on a daily time interval, it'll use 14 days. If we're on the hourly time interval, it will use 14 hours. We also on the platform have RSI 9 and RSI 25. So the RSI 9 will be a lot more sensitive and volatile, while RSI 25 will use 25 periods, in our case, days, and therefore will be slower to respond to price changes. But RSI 14, or 14 period RSI, is the standard that most traders use. And again, the key here is that it's using a ratio of average gains over average losses, as you can see in this formula here. And as a result, what it does, it gives us a momentum indicator that measures the magnitude of recent price changes to analyze overbought and oversold conditions. And also, clearly, as the price rises and we have those consistent gains in prices day after day, then RSI will obviously rise as the number and the size of positive closes increase. So the RSI not only captures the fact that the price closed up on the day, but also by how much, the percentage increase on that day. And then vice versa, as price falls and the number and the sizes of losses increase, then the RSI will decline as well. So that's kind of what drives the RSI calculation. It's really the average gains versus the average losses in the last 14-day period. And the way the formula is constructed is that it basically gives us a scale of 0 to 100. So the RSI values will range from 0 to 100, and that's why it's also called an oscillator. And so let's go ahead and take a look at some RSI charts here, so we can get a good sense of how RSI behaves. We can take a look at Solana. Let's go ahead and actually look at the big chart. Maybe a 1-year chart. Let's stick with the 6-month chart. And for now, let's hide some of the other noise from the chart and stick to the price and RSI levels. Okay, so here on the bottom, on the top part of the chart, obviously, is the candlestick chart, daily candlestick chart over the last 6 months, along with the volume. On the bottom part of our chart composition is the RSI indicator. And as you can see, it oscillates. The key zones that we have identified or indicated here, marked, are 30% and 70%. But otherwise, the full scale is from 0 to 100. Now, the anything values or RSI values that are above the 70 are considered overbought. And in fact, a more extreme value over 80 is what I typically recommend using, is kind of more relevant. And let's see if we got to over 80 right here. We got, or actually a 90 over here. Okay. During the strong rise here, and we got really close to, or maybe even at 90 here as well. So as you can see, during periods of strong gains, RSI can be above 70 for a while. Okay, so just reaching 70, even though technically is overbought, but coins in an uptrend honestly can and actually do stay overbought or over 70 for a while. But really the extreme values like the 80 or 90 are areas and times to be aware of, and we'll explain that later. And it's also noticed that in an uptrend, the coins or the prices rarely actually dip under 30, or they are rarely technically oversold. But coins that are in an uptrend, we could consider oversold even higher than that. I'd say under 40. So in this zone is a good buying potentially good buying zone right here. So that, just be aware, because the technical definition is over 70 overbought, due for a correction, over 30 oversold, I mean under 30 oversold, due for a bounce. Yes, but that's too general of an explanation, but really it depends on the context. And so for coins that are in an uptrend, as we can look at and use our trend ratings on the short-term, medium, or long-term basis to identify coins in an uptrend, and we will do that when we build custom filters. But coins in an uptrend really don't get, I'd say, oversold until they get to 80 or 85, and that's kind of that gives me some warning flags, red flags. While also coins in an uptrend rarely dip below 30. And frankly, already when they dip below 40, to me, they're oversold and opportunities to go long, to buy. Okay. And again, when you flip that with coins in a downtrend, the whole playbook flips, right? So let's go ahead and look at the rest of the slide here. Right. As I mentioned, technically, when you look at the definition oftentimes mentioned out there, is that the 70 and 30 are sort of the thresholds, but again, depends on the context, and that's why I recommend using more extreme levels to make the decisions. For coins in an uptrend, 80 is or higher is considered really, for me, overbought, while coins coins in an uptrend, I guess when they dip below 40 is your opportunity, and they're oversold. We covered the RSI 14 versus RSI 9 and 25, so I don't need to cover that. And let's go ahead and jump into actual practical use cases for RSI strategies and build some screens or custom filters. Oh, no. Okay, you guys, some of you can, some of you cannot hear me. Is that still an issue? You're loud and clear, works perfect. Okay. Okay, thanks for the feedback. All good. Great. So let's continue. Let's jump into and build some custom filters so we can identify some interesting opportunities. So there's actually 4 use cases that we'll cover. One is situations when coins in an uptrend pull back and are oversold on RSI. We'll build several different screens or custom filters for that. Second use case is the extreme overbought near resistance. So that will be perhaps areas when we want to trim our positions or exit completely. The third case is actually builds on what we learned in the lesson 4, which is the prior lesson about momentum in an uptrend, where we use MACD as the primary indicator for momentum, but we can now layer on RSI as another indicator that will confirm that MACD bullish crossover. So we'll cover that as well. And then lastly, we'll talk about RSI divergence, bullish and bearish RSI divergence. Okay, let's go ahead and build a custom filter. So here I mentioned, let's start with a very basic one. RSI below 30. Let's see what we get. We may have to adjust that to RSI below 40. So we go to the screener. We say, by the way, we have a lot of presets here. In fact, one of them is oversold under 30. So you may even just use that. Add the filter. So now we've got 83 coins that are under 30 out of about 1,700. So we've already narrowed it down quite a bit. Doesn't surprise me considering that we've had several bullish days in the marketplace. And so very few coins are probably getting sold off. And then the other is just my standard market cap. Let's be over 5 million. So now we're down to 34. All right. Okay. So, we've got 34 coins. We could go through the each individually. Well, let's keep building this filter a little more. Now, what I will do, I will add the trend indicator because, again, we want to trade with the trend. If we're looking for opportunities to buy, then we want to make sure that at least the medium and even the long-term basis, this coin has been trending up. On the short-term basis, it may not be the case because the short-term can change quickly. And if this is a situation where the coin has sold off, the short-term trend could be very well neutral or even down. But more importantly, the medium trend needs to be up and the long-term trend as well. So we're going to add medium trend is up. And long-term trend also needs to be up. Wow, we're down to 3. Okay, so this is what I'm talking about. Coins that are in an uptrend rarely dip as low as 30 or below. So we're going to relax this, and the RSI below 30, I'm going to replace with RSI below 40. Below 40, 40. Okay, we got 21. And add our market cap, that will probably eliminate a few as well. Market cap above 5 million. All right, we got to 21 coins. Nice. All right, so here are some decent candidates. Let's look at the trends. Right, so they're up on the medium and the long-term basis, as we requested it to be. On the short-term basis, it's a mixed bag. Some are down, neutral, up. That's fine. Obviously, I would expect the short-term to be disrupted, considering that we're looking for exactly those situations. And we can go ahead and look at the charts and what we have here. Now, ideally, we find something that is, let's go ahead and get rid of some of the noise, like right now, MACD and SMA 50, we don't need. I'll keep the SMA 200. That, to me, is also an important support area. But ideally, we find a situation of a coin that's oversold on an RSI basis. It is in an uptrend on the medium and the long-term basis, as we stipulated in our filter. but it's also approaching or near the support level. Support resistance, so key to every trade and every analysis. So let's take a look at the first one, waves. Take a look at the big picture at first. Okay, you see the 200 simple moving average is trending up. So overall, on a long-term basis, that to me is an indication that it is in an uptrend. And generally, even visually, we see that in recent months, it has been in an uptrend, and we've had a pullback here. That pullback has reached some really oversold conditions. So we should be, or there could be very well a period of a bounce. Now let's see if we're near some kind of a support area. I'm trying to get to some, here we go, support area, make the price chart a bit bigger here. You can do that by scaling this little button here. All right, so the price, let's see, we're getting close to 25. Let's go ahead. Now I don't have my controls. My bad. Sorry about this, guys. Okay, now I hid my controls and I can't get to them. All right, I'll have to do without them. So we're getting near 25 level here. I'd say there's been a couple of touch points here that where it acted as a support level. Here as well. Here it was broken, but for a very short period of time. So I'd say 25. And also, by the way, we're near the 200-day moving average, and that also acts as a dynamic support level. Oftentimes, if you look at the big picture here, it almost, look, it touched here, the 200-day moving average bounced up. It touched it here, violated a little bit, bounced back up here as well. So the 200-day moving average is also often used a support level or a resistance if we're below that. And so we're close to that. So I really like this situation because we are near a support level, which I think is about, in fact, it's more like 22 or so, maybe 25. I'm sorry, 24 to 25. And my downside, possibly I could have some support level at the $21 level, which is my SMA 200. And so this to me would be a valid trade, and maybe we'll do it at the end of the lesson. So that's kind of the thought process here. Let's add one more cherry on the top of this filter that we've built thus far. And that being, on top of everything we have here, we're going to add another indicator that could strengthen this signal. And that's MACD histogram. And this is actually a recent addition to our filter capabilities. And I'm going to say H2 is up. Now, what the hell is H2? All right. So in the last lesson, lesson 4, we talked about using MACD bullish and bearish crossovers for momentum trades. We also talked about the fact that MACD histogram. So I'm going to apply this. Let's add back MACD histogram to our chart, or MACD in general. So MACD histogram are these green bars here, right? And we said that the MACD histogram is actually more sensitive to momentum changes than the crossovers. So the crossovers like this, sell and the buy, are typically our signals when we talk about momentum trades and trading MACD crossovers. But you'll notice that the MACD histogram bars oftentimes already indicate a change in the momentum a few days ahead of the actual crossover. So what we're trying to do here is, by adding MACD histogram to our custom filter, we're saying, okay, it's oversold, but the momentum is starting to shift. We're at the beginning of a potential momentum shift in the price. Now, it could be too early, and that's kind of the downside of the MACD histogram, is that it can be a bit too early. But when we combine it with some of the other signals here or indicators, such as oversold RSI levels at the support level and so forth, it adds evidence to our case. And so now we reduced it to about 7 or so coins that satisfy this criteria, 11 apparently. Okay, so I think this is useful addition to the filter. It doesn't have to be. I think what you should do is probably create and save multiple of these, multiple versions of this filter. So this is oversold uptrend, and we'll say H2 up. So that's my filter, and now I'm going to get rid of the MACD histogram and save it as a more relaxed version. All right, and I have both of these filters now in my saved filters right here and here. And you can use both, right? If you don't find anything interesting using the one that's really restrictive, really selective, then you can kind of scale it down, relax it a bit, and look at a version that will give you more results, perhaps. So that's that. So that's oversold near support, sort of trading strategy. We'll come back to it when we actually execute the trade. The other, so I'm going to open a new coins window so I can come back to the one that I just created. And now the second strategy, as I indicated here, is really maybe not even a strategy, but an exit strategy rather than an entry strategy. And that's looking at the extreme overbought situations near resistance. Now, let's go ahead and build that. So that consists of kind of the opposite way of thinking about things here, meaning we're looking for coins where RSI 14 is above kind of the extreme level. Let's talk about 80, right? Now we're down to 49 coins that are that overbought. And I'll add my usual market cap as well. 29 coins. Here we are. Now, these will be all more or less, should be all in an uptrend across the board, as you can see here, okay? Some of them on the long-term basis are actually on a strong downtrend. So maybe they've just had a recent real strong upswing. But how do we use this filter? Well, I wouldn't use it to short coins because these are in an uptrend and we don't want to go against the trend in general. What I use this is really as a warning. If I'm involved in some of these coins and we get to these kind of overbought levels, that for me is a warning, a red flag that perhaps I should take a look at that situation, maybe trim my position, take some profit off the table. And to do that, for example, if you connect your exchange account to our system, then you'll be able to then filter these results with a portfolio. Well, in our portfolio, we really have one position, so I'm not surprised it doesn't show up, but you could do that. Or if you put it in a watch list, then you can do that with the watch list. Okay, so on my watch list, I have a Thorchain. So that shows me that Thorchain is very overbought. Let's look at what's going on here. Had great gains. Very overbought. The RSI is 85.8. Now, is that enough for me to say, okay, if I were involved, which I'm not, should I be taking profits here? Again, I'd say that we also need to look at support and resistance and make that assessment as well. So let's get rid of some of the things that we don't need in this chart and see if we can identify support and resistance. So we just broke about 15, and 15 was really a resistance level in the past here, we can see. Oops. And then we're approaching about 1750 or so. I mean, in the past, we saw some spikes here around that level and reversals, but really the next big level is really almost the all-time high at 20. So I would say I might trim some of my position, but I would let the rest of it ride out because I do think that there's a good chance we get to 20. I mean, again, we like right here, things are never going straight up, right? So even in this big run we've had, a couple of days of pullbacks, you could see if you can time that perfectly, sell here, wait for a pullback and buy it back up, based on the fact that it's very extremely overbought. And what I would probably do here is trim some of my position and let the rest of the position ride out to until we get closer to the 20 level. Okay, so that's another filter that you can save, obviously, and even create an alert for, and let that be a potential red flag for positions you have in your portfolio or on the watch list. The next use case for RSI that I want to demonstrate is actually one that builds on the prior lesson, as I mentioned, where we used MACD indicator as our momentum signal. And this RSI and this filter or that strategy can be enhanced with the RSI indicator. And when we look back at the RSI, let's open another one. Let's take a look at Ethereum, for example. All right. The 50 level is basically the center line of the 0 to 100, right? RSI is an oscillator that oscillates anywhere between 0 and 100. Typically, the traders look at the 50 or the center line crossover from below to above. So across above the 50 is typically an indication of a strengthening momentum. And when you pair that up with the MACD crossover, it could be basically confirming the MACD crossover. As you recall, in the last lesson, one of the downsides of using MACD crossovers as a signal is that there could be a lot of false signals, and the RSI crossover could help you eliminate some of those false signals by confirming that MACD crossover. So let's take a look here with the Ethereum chart here. As we go through, see right here, you know, if you imagine, I wish I had my tools. Can't find them anymore, but I would draw a line at 50 level, and you would see, actually, let's open up a bigger picture here. And we'll make the price chart smaller to make the RSI bigger. And in fact, I'm going to tune, well, no, I need the MACD. Okay, so let's go through this chart, maybe 6-month chart. So look at this. When we got a buy signal here on a MACD here back in, when was this? July. We could have pulled the trigger right there. Fine. But we got a confirming signal from the RSI crossing over 50 right here. Okay, so that's a confirmation of my bullish MACD crossover here, and it worked out well. And then another bullish crossover happened here. Okay, similarly, I got my buy. So right here, I've got my buy here, but I didn't really, the RSI was already above 70, so I didn't really get a confirmation. But here, after the swing down and then started picking up the momentum here, I got a MACD buy signal here that was shortly preceded or followed by an RSI crossover over 50. So the 50 center line crossover for RSI is an indication of bullish momentum rising. And we can combine it with the MACD crossover as well to strengthen that signal and eliminate some of the false MACD crossovers. Okay, so let's build that filter back up. That filter included MACD bullish crossover, as you recall, and where we said, let's find all the situations where MACD crossed above MACD signal line. So that's your bullish MACD crossover in the last 2 days. Now we're going to layer on the RSI crossover. So crossed above the 50 in the last 5 days is fine. So if it preceded the MACD crossover or it happened shortly after that, that to me, either way is a good confirmation of the MACD bullish crossover. So I'm going to add that. Now we're down to 33. And again, standard, if you're going to buy it, you want to make sure that it's an uptrend, at least on the medium and the long-term basis. So we add those two filters as well as my market cap minimum of 5 million. All right, so we're down to 7 coins that satisfy this improved momentum in an uptrend strategy filter. So wanted to make sure, let's take a look at the charts, that want to make sure that you are aware of this additional sort of trick, and we can confirm that here in the charts here, that here we have a bullish buy or bullish MACD crossover that was also confirmed by a bullish crossover above 50 in the last 5 days by RSI. So this really confirms our potential entry here. Similarly here, you're going to have the same results here. Buy, confirmed by a bullish crossover, and so on and so forth. Great. And then the last use case for RSI, and unfortunately, I can't even see your questions. Let's see if I can figure this out. Because it really bothers me. Well, that stinks. Ah, got it. So sorry about that. Okay. Let's go over this RSI divergence use case of using RSI. I'm sure you may have heard of divergences. There are MACD divergences, there are OBV divergences, RSI divergences, and those can be pretty interesting confirmation indications. And let's go over what I mean by that. But what a bullish divergence means, and we'll look at some examples, is when price is declining, but the RSI is actually rising. So they're going in the opposite directions. That should raise an eyebrow. That's a bullish divergence. Price is declining, but RSI is rising. That may be, and it's bullish divergence, so obviously that indicates there could be a bullish opportunity. We'll look at those. Bearish divergence is the opposite. Price is rising, but the RSI is not rising. Typically, RSI is rising as the price rises, right? So look at the examples here. Let's really any one of these. So typically, like here, price is rising, RSI is rising, price reaches sort of new local highs, so is RSI. The price goes higher, RSI goes even higher, right? That's your logical sort of evolution of the or price action and the trend of the RSI. The RSI, if the price is going up, RSI should be rising as well. But there will be times that that's not the case, and those are opportune time or important times, or could be important times to pay attention. Now, what I've wrote here is that these can be used, especially the bullish divergence situations, can be used as a confirmation of a reversal pattern. So a lot of times divergences in general are not enough, and that's typical of any indicators, that you kind of want additional supporting evidence of something. Just using just RSI or just MACD or just stochastic is not enough. You kind of need a confluence of a few indicators, not too many, because then you get to analysis paralysis. But you need a few in your strategy, and you stick with them for that strategy. So RSI divergence in itself is not typically used as the only sort of signal in itself, but as a confirmation of another event that took place. And so let's take a look at some of these interesting situations that really happened just really in the last month or so, like vet chain. I'm going to zoom in right here. Okay, so what happened with vet chain? And this is really just last month or so. Well, it wasn't an uptrend, but it was consolidating in a falling wedge pattern. Okay, and then once we identified the falling wedge pattern, and this is something that we'll do in the future lessons. So I'm jumping a bit ahead, but I want to show you how RSI divergences are used. At the end of this lesson, you may not be able to apply this just yet, but in the future you will. The falling wedge pattern emerged, and what happens is we typically wait for a breakout from this pattern. It could be up, could be down. Typically, a falling wedge pattern is a reversal pattern, so that means that the price reverses the trend of the pattern. Right? So if it's a falling wedge pattern, then the reversal would mean that it's going to break out bullishly, and it did. And now the other supporting evidence that this is a valid bullish breakout from the falling wedge pattern was that we identified the bullish RSI divergence. And if you notice that while the price, so you typically look at the lows, right? It's sort of the swing lows. While the price dipped here, right? Clearly it dipped from this point to this point just before the breakout. The RSI actually at those exact times, at those swing lows, if you connect those two points, the RSI actually was rising. That's your bullish RSI divergence. Price is declining, but RSI says, no, the momentum is actually improving. And that breakout was therefore confirmed by this bullish RSI divergence. Now, typically traders in these situations, they get involved once the price breaks above the prior or the most recent high, the most recent swing high. The most recent swing high was here. The price broke out of the pattern, and then broke through that most recent high. So basically it's making a new higher high, right? Which is an indication of potential uptrend. And what you would do is typically you would exit or that your target would be sort of the entry point of the pattern, which is around here. So the target would be about 15 cents. As you can see, we got really close here. So, always kind of use that as a zone, not a specific level. And the exit here would be, somewhere just below sort of the pattern pinnacle. Oh, yeah. So that would be around 7 cents. Okay. But the point of this exercise is that the bullish RSI divergence helped me confirm the bullish falling wedge pattern breakout. And that's supporting evidence. Now let's go. Oh, by the way, on this chart, notice as I zoom back out that there were some other divergences here in the recent past. And that's, if you can spot it, is one of them is bullish and one of them is bearish. So let's look at these two high points. So while the price pulled back here and then was going and making sort of a new high, a new swing high, what did the RSI do? Ouch. RSI wasn't following the price. RSI actually from these 2 points was diverging, and that's a bearish divergence. While the price was going up, the RSI declined. That's a bearish divergence, and that should be a warning flag that this price increase may not be sustainable, that there could be a pullback or a correction. And then there was another bullish divergence, which was here. If you look at the local low and here, the swing low and another swing low, right? The price essentially declined here, made a lower low than it did here. This point is lower than this point. So price declined, yet the RSI increased. Another sort of bullish divergence. And in fact, after that, the price did break out or reversed from these levels. So divergences can be very, very useful. And if we can make some additional, if we can use them to perhaps find other supporting evidence that perhaps, right, what happened here? Well, we got a buy flag from MACD shortly after that. And the RSI crossed over 50 here, right? So I wouldn't have bought it right here at the bottom. Don't get me wrong, but all that evidence would have maybe got us into the trade right here, which would have been pretty decent thereafter. Now the downside to RSI divergence is that it's not something that we can create a filter for and scan the market and find divergence. It's something that we're working on, but we're not quite there yet to demonstrate it and put it into production. It will be powerful when we figure it out. But for now, it's something that you can visually sort of keep an eye out for as you look at some charts that you're investigating for whatever reason, for whatever strategy that may be. So here is another one, Bitcoin Cash as well, falling wedge pattern. So just a few more examples here, falling wedge pattern, right? Again, another bullish divergence right here, a clear one. The price is down while RSI actually increased at those. While the price made a new low, the RSI didn't make a new low. It actually made a higher low, or yeah, basically it increased from the prior low. So that's a bullish divergence that helped me, or would help me, confirm the bullish breakout from the falling wedge pattern. The breakout happened here. Another example would be engine. That one worked really well. Similar situation, bullish divergence. In fact, it was followed by also a MACD bullish crossover and RSI bullish crossover. You can zoom in on this puppy as well. See if I can capture all that here. So another decline in price, although modest, while RSI was increasing. We saw a bullish breakout from the pattern. Shortly before or after that, almost simultaneously, there was a MACD bullish crossover and also an RSI crossover above 50, the center line from below that, right? There's a lot of evidence of momentum shift, momentum inflection right there. That's like four different indications lining up. Let's see if I have another one. No, that's it. All right, so that's it as far as theory goes. Let's see if we can go back to our initial screen, which is basically this filter is our filter that looks for oversold situations in an uptrend and near a support area. Waves was one situation where we identified that opportunity. We can look at this Badger DAO as well. Right here. So RSI is around 34, 35 or so. The MACD indicators not doing much, kind of flattish, but that's not really the key here. This screen doesn't really use MACD, so I can even remove it here from this picture here. Really what I need to identify is where's the support if we are nearing, because clearly the price is in an uptrend, but it's pulling back and trying to find a support level. And I'd say, I mean, similarly to waves, it's around that 24, 20, 25 level, I'd say, because if I look at some of those recent sort of lows and highs, you know, it kind of lines up with 24, 25. We're sitting at that support area, I think, right now. My downside, if I get it wrong, there's another support zone with a 200-day moving average. Although this 200-day moving average is pointing down, which isn't particularly ideal. So I'd say I like the first trade a bit better. So waves it is. Let's put on this trade and see what happens. So I go to the trade section. I'm going to trade it against USDT because that's what I have in my account. I can look at the chart one more time here. You can check the order book, see if the order book is really tight. There's only a penny spread between bids and ask, which is pretty solid, good liquidity. And I'm going to buy about $1,000 worth, which at this price of $26 is about 40 units. Gonna give it a limit. Want to buy it, 40 units. Here you go. Okay. Oh, this is a order from last time. This is my sell stop limit for one of the positions that we have in the portfolio still. But it looks like the order went through. We are now proud owners of about 40 units of waves based on this strategy, which is oversold in an uptrend near a support zone. So we're obviously of the opinion, or I am, that is, that we're going to find some support and resume an uptrend. And my upside here, I'd say, is 30, which is the next support, next resistance area. Okay, we got some questions about how many days are used for short, medium, long-term trend indications. You can find that in our knowledge base, but it basically uses various time frames or time horizons for short, medium, and long-term. And again, this is in our knowledge base. So if you need help with that, hit us up on chat. Let's see if there's any other questions. Please share with us what is short. Okay, you mean short term or going short? I guess what you meant is short term. Okay, so that really answers, again, you can find it in knowledge base. We have an explanation of how we calculate the short-term, medium, and long-term ratings as well. All right, guys, well, that wraps it up. Those are the 4 strategies for how to use RSI in your trading. I believe that will help you greatly in finding the right entry levels. And if you build those filters, custom filters that we've gone through here, and save them, and also create an alert. So I didn't do that. Let's do that actually real quick. So I get back to this filter, looking for oversold coins in an uptrend. I can click on this alert icon and give it a name. Okay, and now I have an alert that will alert me of all those coins on a daily basis that satisfy this criteria. So you can easily then jump. Here it is, the alert, and here will be the notifications on the daily basis with the coins that satisfy that criteria, and that really could save you a lot of time with your daily trading workflow. I hope you enjoyed it, and we'll see you on Thursday for lesson 6. Good luck, everyone. Thank you.